Do you ever open your mailbox in January and feel that sense of dread as tax forms start arriving? Or maybe you stared at a blank Form 1040, wondering what all those lines actually mean? You're not alone. Tax forms can feel like they're written in another language. But what if I told you that understanding these forms isn't just about avoiding IRS problems, it's about keeping more of your hard-earned money? Today I'm going to walk you through everything you need to know about your tax forms, from the basics of Form 1040 to the supporting schedules that might apply to your situation. Welcome back. I'm John Thompson, owner of JCT Tax Solutions. This is the third video of our Taxes 101 series, where we try to make taxes easier to understand. Having dealt with tax issues for years, I've seen firsthand how confusing the various tax forms clients receive can be. I think everyone knows about Form 1040 and many are familiar with the W-2, but then you get past tax season and a seemingly random 5498 shows up and you start to wonder if you need to amend your return. Let's break down all the details. Before we dive in, I want to emphasize something important. This video is educational in nature. While I'll explain concepts as clearly as possible, your specific situation may have nuances that deserve personalized attention. It's also worth noting that your tax return documents what has already happened, while tax planning starts to consider ways to change things that haven't yet happened. So it's usually a good idea to check in with your tax advisor before making any big decisions. Also, we'll be looking at the 2024 version of these various tax forms, since the 2025 versions haven't been released yet. Tax laws and forms can change from year to year, so always double check the latest information. Now let's get started with the foundation of almost every tax return, Form 1040. Think of Form 1040 as the hub of your tax return. Almost everyone needs to file this form, and it's where all of your tax information comes together. Let's break this down by section. At the top of Form 1040, you'll enter in your basic information, like your name, address, Social Security number, or your ITIN. There's also a box here for the Presidential Election Campaign Fund. Checking this box does not increase your tax or reduce your refund. It simply directs $3 of existing federal funds into presidential campaigns. The next section in here is the filing status. Your filing status is crucial because it determines your standard deduction amount and your tax brackets. The 5 options here are single, married filing jointly, married filing separately, head of household, and qualifying surviving spouse. Generally, your status on December 31st determines your filing status for the year. For most married couples, filing jointly provides better tax benefits than filing separately, but there are exceptions. If you're unsure which status applies to you, the IRS provides an interactive tool on their website that can help you determine your correct filing status. The next section in here is about digital assets. This question is relatively new. If you received digital assets as payment, or if you sold assets like cryptocurrency or NFTs, you'll need to check yes here. Remember, just because it isn't cash doesn't mean it isn't taxable. If you bought digital assets, or if you just held digital assets that you purchased in a prior year, you can answer this no. The next section is standard deduction. This section isn't actually about whether or not you'll take the standard deduction. That decision will come later. Instead, it's about how much of a standard deduction you would be entitled to. You'll check boxes here if you or your spouse could be claimed as a dependent on someone else's return, if you or your spouse are 65 or older, or if you or your spouse are blind. Each of these factors affects your standard deduction amount. The next section in here is about dependents. This is where you'll list anyone you're claiming as a dependent. This includes their name, their Social Security number, their relationship to you, and whether or not they qualify for the child tax credit. One important note here, dependents aren't always your children. They could be other relatives or even non-relatives who get more than half of their financial support from you and meet other specific criteria. And if you're dealing with a situation involving divorced parents or shared custody, this can get complicated. Having good documentation is crucial, and in some cases using Form 8332 might be necessary. The next section is income. This is where we get to the meat of your tax return. Let's walk through each of the lines. Line 1 is about wages and salaries. This is where you report income from your W-2 forms. If you had multiple jobs, you'll add all of your W-2 income together. It includes several subparts. So line 1A is for your W-2 information. 1B is for household employee wages if you worked as a household employee. 1C would be any unreported tips. So if you received tips at your job that were not reported on your W-2, you would report them here on line 1C. Then lines 1D through 1I include some less common income types, but they're really important to fill them out if they apply to you. So take a look through them, and if anything looks important, make sure to include that in your income. Line 2 is about interest income. This is where you report money earned from bank accounts, CDs, or bonds, typically reported on a 1099 int form. 2A is for tax-exempt interest, like municipal bonds. 2B is for taxable interest. And you'll see the same pattern work through the next several lines here. If you had more than $1,500 in taxable interest, you will also need to complete Schedule B. Line 3 is about dividends. So this would be income from stocks and mutual funds that was reported to you on Form 1099 Div. So line 3A is for qualified dividends, which receive preferential tax treatment, and 3B is for ordinary dividends. And again, if you receive more than $1,500 in ordinary dividends, you'll need Schedule B. Lines 4 and 5 are around IRA and pension distributions. This is where you report withdrawals from your retirement accounts, which may be partially or fully taxable, depending on what type of account it is. Remember, if you're rolling over money between similar retirement accounts, there's nothing to report. But if you're converting from a traditional IRA to a Roth IRA, for example, that would be a taxable event. Line 6 is about Social Security benefits. Yes, your Social Security benefits might be taxable if your income exceeds certain thresholds. There's a worksheet in the instructions that will help you calculate this. Line 7 is around capital gains and losses. This is where you report profits or losses from selling investments, properties, or other assets. Don't forget about cryptocurrency transactions. They belong here too. For most people with capital transactions, you'll need both Schedule D and Form 8949 to properly report these. Line 8 is all about other income or additional income that doesn't fit neatly into any of the above categories. So let's pop over to Schedule 1 and take a look at what this might include. So Schedule 1 is where a lot of the other additional income things can come into place. Things like unemployment compensation, gambling winnings, canceled debt, even Olympic medal winnings. Line 10 on here is what ends up going back to your 1040 onto line 8. When all of that is said and done, line 9 becomes your total income. So it's a summary of all of the information from the above categories. Okay. On line 10, we get our adjustments to income. So this is where we get to deduct certain expenses directly from your income, or these are sometimes known as above-the-line deductions as well. You can take a look at Part 2 of Schedule 1. You'll see line 26 down here is where it goes over to line 10 on the 1040. So this is where things like educator expenses, HSA contributions, self-employed health insurance, student loan interest, IRA contributions, and more get incorporated into this. So these end up being direct reductions from your income. And when you subtract that from your total income, this is where we get line 11, your adjusted gross income. Now this is a crucial number that affects many deductions and credits, and it's often requested when verifying your income for loans or other purposes. So it's really important to make sure you get this number right. If this number is wrong, it's going to impact a lot of things down the road. Now it's time for some deductions. So you can see on line 12 here, this is where we determine whether or not we're going to take the standard deduction or if we're going to take the itemized deduction. So you can see in the left margin here, the standard deductions are set here based on your filing status, which is why it was really important to get the filing status right up front. And then there's additional values that get added in if you're above 65 or blind. So you do have to go to the instructions if you ended up checking any of those boxes to get those updated amounts. If you do choose to itemize, you would go to Schedule A, and this is where you can calculate your itemized deductions. So it's worth going through here and double checking, adding up the values to see what things you would be eligible to take deductions for. Compare that to the standard deduction. Whichever one is better for you is the one you get to take. So in here you'll see the first section is medical and dental expenses. That's one of these categories we've always heard about, where it's if you have big medical expenses or anything like that, you can often deduct them on your tax return. It is limited to the amount that exceeds 7.5% of your adjusted gross income. So it actually does that calculation for you here on line 2, where you go figure out what your adjusted gross income was from line 11, multiply it by 0.075, and that determines how much you would be eligible to deduct. And as long as your medical and dental expenses exceed that, then that would be the amount you could deduct. This includes direct medical and dental expenses. It does not include the cost of medical insurance. It does not include anything that was taken out of your paychecks or anything like that. Anything that was already tax advantage, this is not a way for you to double dip. The next section is all about taxes you paid. So this is your state and local taxes, sometimes known as SALT. It is limited to $10,000 in this section. As you can see on line 5E, enter the smaller of 5D or $10,000 or $5,000 if married filing separately. As you can see from 5A, you can choose if you want to take your state and local income taxes or your state and local sales tax. It depends on how much you end up paying in each of those categories. You can take one or the other. You may not take both. B would be your state and local real estate taxes. So that's going to be your property tax. C would be state and local personal property taxes. So that's things like the tabs you pay for your car, truck, boat, RV, whatever you have. When you add all of those together, as long as they don't exceed $10,000, you can take it. If they do exceed $10,000 or $5,000 if you're married filing separately, that is the cap. The next section is about interest you paid. So if you pay home mortgage interest in points, you can deduct that on here. If you paid points when you got a new loan for your house, you might have to amortize those points over a number of years. If you pay interest that's not reported on Form 1098, you can report it here. There's some rules around that too. Otherwise, if you have some investment interest, you can sometimes deduct that. There's a lot of special rules around that one as well, but the home mortgage interest is the most common thing you'll put into this section. And then down here is gifts to charity. If you made gifts to charity, this is the section you can put them in. Make sure you've got good documentation around it. If you were dropping things off at Goodwill or Salvation Army or something like that, make sure you're getting the receipt and keeping track of the items that you donated. If you're donating cash or check, make sure you get receipts, especially if the value is over $250, to make sure that it gets properly accounted for and you've got backing in case the IRS ever comes knocking. Line 15 is about casualty and theft losses. So if you're in a federally declared disaster area, you may be able to take a deduction for the amount of loss you sustained in that event. There are a few other situations where you can put some itemized deductions in line 16, but the most common ones here are the medical expenses exceeding 7.5% of your AGI, your state and local taxes, your mortgage interest, and your charitable contributions. So if you add all those up and it's less than the standard deduction amount that we calculated over here, then you should take the standard deduction. If it's higher, then you should take the itemized deduction. Line 13 here is about qualified business income. This is a deduction for owners of pass-through businesses like sole proprietorships, partnerships, and S corporations. It can be quite valuable, but the calculation is complex and may require Form 8995 or 8995A. So then after taking our adjusted gross income and subtracting out either our standard or itemized deduction, and then subtracting out our qualified business income deduction, this is how we get to line 15, which is our taxable income. So this is the amount of money we are actually going to have our tax calculated based on. Now in the next section, we're going to do our taxes and our credits. So on line 16, now we calculate your tax based on your taxable income. The instructions provide tax tables for different filing statuses and income levels. It's worth noting that our tax system is progressive, meaning different portions of your income are taxed at different rates. The highest rate only applies to the portion of your income that exceeds certain thresholds. Line 17 is a calculation from Schedule 2, line 3. So let's go take a look. Effectively, there are certain things that get added to your tax, such as excess advance premium tax credits that need to be repaid, repayment of clean vehicle credits, or the AMT or alternative minimum tax. So once you've calculated that all on here, line 3 gets reported back onto Form 1040 here on line 17. So then that gets added to your tax. On line 19, we'll start looking at some credits here. Tax credits are dollar for dollar reductions of your tax bill, making them more valuable than deductions. So we've already calculated the tax. Anything that happens as a credit is going to directly reduce the tax, whereas a deduction directly reduces your taxable income. Some common tax credits in here include child tax credit, education credits, retirement savings contributions credit, foreign tax credit, and energy efficiency credits. Many of those credits end up being reported here on Schedule 3, and then they will flow through to line 20 or line 31, depending on where on this form those credits are. Now 25 through 33 are all about payments. So now that we've calculated how much tax you owe, which would be the total tax we calculated minus any of these credits that we just applied, Now we're going to look at how much money you've already paid. So if you've already made payments through paycheck withholdings, or if you've made estimated tax payments, or certain refundable credits actually flow through to this section as well, you'll see them all documented here. So by the time we get to the bottom of this section, line 33 is all about total payments. So how much money have you already paid in, which also includes things like the earned income credit. Now, if line 33 is more than line 24, the government owes you money. If line 33 is less than line 24, you owe the government money. So if the government owes you money, that would be calculated on line 34. This is the amount that you overpaid and can have refunded to you. If you choose, on line 36, you can apply some of those dollars toward your 2025 estimated taxes. Otherwise, you can use line 35 to fill in your bank account information to have this money direct deposited to you. I highly encourage direct deposit. If you don't want to do direct deposit, they can mail you a check. It does take a lot longer. Otherwise, on line 37, if you owe money, this is where you calculate that. And there's information here to go to the IRS website to get information on how to make payments. You can make your payment directly along with your tax return. I find it's generally better to just go to the website and make a payment directly, or print off a payment voucher and mail that in separately. If your payment is sent along with your tax return and your tax return gets rejected, your payment's not going to get processed, and now you might run into penalties that way too. Now remember, this is a pay-as-you-go system, so if you did not have enough money withheld from your paychecks over the course of the year, or if you did not make appropriate estimated tax payments or things like that, line 38 is where you might calculate an estimated tax penalty. Then we get down to the bottom in the third-party designee section. This is where you can decide if you want to allow another person to discuss this return with the IRS. Typically, if you had a paid preparer do your return for you, they might be filled in this section. That way they can directly work with the IRS on your behalf to answer questions or check on status or things like that. Otherwise, you might also do this in a parent-child relationship or something like that, where you want somebody to be able to ask questions on your behalf for you without you doing it. The next section is incredibly important. That is the signature panel. If you're filing this on paper, you're going to have to put a wet ink signature on here and fill in the date before you send it in. If you're doing this digitally, there's usually going to be a step in the process where you can electronically sign your return. If you have an identity protection PIN, it's also very important to make sure that number gets put in here. Otherwise, your return will be rejected. If it is a married filing jointly return, both spouses must sign the return. And the bottom section is very important if you used a paid preparer. If you're paying somebody to do your tax return for you, their name, address, phone number, signature, and PTIN should all be filled in this section on the version that is sent to the IRS. Sometimes for security reasons, the PTIN will get blocked out, or the EIN might get blocked out when you get your client copy. But if this section is completely blank and you paid somebody to do it, I would start asking some questions. So now that we've gone through Form 1040, let's briefly touch on some of the common supporting schedules. So we touched on Schedule A already with the itemized deductions. If the total of your eligible deductions exceeds your standard deduction, this form can save you money. Schedule B is all about interest and dividend income that exceeds $1,500. It also includes questions about foreign accounts and trusts. Schedule C is all about reporting business income and expenses for sole proprietorships and single-member LLCs. If you're self-employed or if you have a side business, you will likely need this form. Schedule D is used to report capital gains and losses from the sale of investments and other assets. It works in conjunction with Form 8949. Schedule E covers rental income, royalties, and income from partnerships, S corporations, estates, and trusts. If you're self-employed, you'll use Schedule SE to calculate Social Security and Medicare taxes. Remember, when you're self-employed, you pay both the employer and the employee portions of these taxes. Now let's talk about some common forms you'll receive during the tax season. Form W-2. Your employer provides a W-2 showing your wages and tax withholdings. You'll need this information to complete your Form 1040. The 1099 series. These forms report income from sources other than employment. 1099 NEC, which stands for non-employee compensation, is for independent contractors. 1099 MISC would be for miscellaneous income. 1099 INT is for interest income. 1099 DIV would be for dividend income. 1099-R is for retirement distributions, so when you take money out of your retirement account. 1099-G is for government payments, which includes state income tax refunds. And 1099-K is for payment card transactions. The Form 1098 series documents expenses you might be able to deduct. 1098 is for mortgage interest, 1098-E is for student loan interest, and 1098-T is for educational expenses. Now let's talk about staying organized. Create a dedicated tax folder to collect and organize your forms as they arrive. Make a checklist based on last year's return to ensure you don't miss any forms. Consider electronic filing for faster processing and fewer errors. And keep your tax returns and supporting documentation for at least 3 years. Remember, just because you didn't receive a form doesn't mean you don't owe tax on that income. The IRS often knows more about your financial situation than you might realize. Now let me address some common questions. When should I expect my tax forms? Most forms, including W-2s and 1099s, should arrive by January 31st. Some investment-related forms might come in mid-February due to their complexity. What if a form is missing? Contact the organization that should have sent it. For missing W-2s, you can contact the IRS for assistance after February 15th. But the general rule is, even if you didn't get a form, you still need to report it. How long should I keep tax documents? Keep records for at least 3 years from the filing date. However, some situations require longer retention. Property records until at least 3 years after selling the asset. Worthless securities or bad debt deductions you should keep for 7 years. And if unreported income exceeds 25% of your gross income, you should save information for 6 years. What if I find errors on my tax forms? Contact the issuer right away to receive a corrected form. If you've already filed, you may need to file an amended return using Form 1040-X. Now, we've focused on federal taxes so far in this video, but it's important to note that most states also have their own income taxes. Here's a few key points to remember. 41 states have a state income tax. Alaska, Florida, Nevada, South Dakota, Tennessee, Texas, Washington, Wyoming, and New Hampshire don't tax wages. Most state tax returns start with information from your federal Form 1040. Your federal AGI, or adjusted gross income, is often the starting point for your state return. States have their own deductions, credits, and tax rates that may differ from federal rules. Some states have flat taxes, while others use progressive brackets similar to the federal system. If you work in one state and live in another, you might need to file returns in both states. Many tax software programs can prepare both your federal and state returns, carrying over information automatically. If you're using a tax professional, they will typically prepare both returns for you. Just remember, just because you don't owe federal tax doesn't mean you won't owe state tax, or vice versa. Always check your state's tax department website for specific requirements and deadlines. Understanding your tax forms is an important step toward financial confidence. While tax forms can seem intimidating, breaking them down into manageable pieces can make them much more approachable. Remember, staying organized throughout the year can make tax season much easier. Keep good records, use a checklist, and don't wait until the last minute to gather your documents. If you found this video helpful, please give it a like and consider subscribing for more tax and financial content. And if you're facing complex tax situations, or if you just want peace of mind knowing your taxes are handled correctly, our team at JCT Tax Solutions is here to help. We offer personalized tax planning or preparation services designed to maximize your legitimate deductions and credits. You can find our contact information in the description below, or visit our website at jct.tax to learn more about our services. Thanks for watching, and I'll see you in the next video.